And we are live. Hello, everybody. Thank you all for joining. It looks like we already have a lot of people on here. This is actually the very first SCWO live stream. So I am very excited. We have quite a few things in the agenda today, but as you all know, of course, what we're all excited for is their earnings report, which I actually have here ready, but that's in 30 minutes. What I wanted to discuss is some of my expectations, and Mark Berry is going to be joining here very shortly. Maybe we'll talk a little about our tour, our opinion, and some things we'll just kind of chatter about. I'm going to get to the comments here in a sec. But yeah, the full video is expected to drop tomorrow. I'm going to drop it, I think, at 7:30 p.m. tomorrow. And I will put that up soon on YouTube, scheduled, so you guys can like save it and tune in when that happens. So let's see. Wow, first comment from 311. Nice. You guys have been here for a minute. A lot of new people that I haven't seen since my HOVR videos. Real quick, let me text Mark and let him know we are live. So Space Guy says, slight drop as expected. You know what? And I should probably pull up and share screen here soon. I will say there was a lot of patterns that seemed to play out the same as it did last quarter, and that did concern me. But yeah, I'll share screen in a minute here. Let's get to, wow, we have a lot of comments here. Pretty active chat today. 38 people watching. Oh, this is my biggest live stream ever. Wow. Okay. Oh, Mark has just joined. Hey, Mark. Thanks for jumping on.
You've started?
We started. We have 38 people already live here. This is already my biggest live stream. People are really excited. This is really cool.
Great.
And
Forgive me if I'm eating.
Yeah, go ahead. I'll read some of the comments here, and maybe we'll just kind of bounce off of that, give our opinions on things. Although I do have a little bit of an agenda I want to get to and set my expectations actually for the earnings. So, please. By the way, can you see all the comments on your end and stuff? You can read.
I cannot.
No. Okay. Actually, I can.
Oh, wait a minute. Let me. Oh yeah. Now I see them. Mm-hmm.
Okay. Someone leaked the earnings, and it's not as good as expected. Really? Is that true? Someone just dumped a massive load of shares. Yeah, I did see the stock just dropped. I don't know if you saw that. Where did you find the leak? Just my own assumption. Have no clue. Dropped 8% in 5 minutes. Okay, come on. So it was not a leak? Chatting shit then. Nagar might be selling a gun. I don't think Nagar is selling. And you know what? That's something I want to talk about because that's not in the tour video. It was actually off camera after I kind of ended. You weren't there, Mark. I did want to mention this to the people. You weren't there to listen to this, but Jim spoke to me. He told me, and this is not like something he says not to share or whatever. We just briefly spoke about Nagar and how he spoke to him about a week ago. So at this point, it would be 2 weeks ago in person. They met up in person. And he basically spoke to him about how if he wants to sell shares, like let him know and he'll get him someone to buy his shares. That way it doesn't actually drop the stock or nothing happens. Like he'll do a direct purchase, not through selling on the active float. So and that he was friendly about it all and seems like he's ultimately like interested and invested in the company. So he's the biggest shareholder. Jim wants Nagar to be comfortable and happy about everything. So he developed in-person reputation with him. So that's good to know. Everyone's really worried about Nagar, but I don't think Nagar is actively selling here every day looking to dump on us. So I think really
earnings have released
already.
Mm-hmm.
Oh,
yeah, recorded quarterly losses of 3 cents per share.
Can you share on your screen? Wait, where is it? I only have the.
I'm just looking on my Schwab account.
Okay. Oh, let me open, I guess, in my Robinhood. Okay, let me get this pulled up for you guys before I just pop open. Wow, how I thought it would release this right at 4:30.
The company reported 760,000 in sales this quarter. This is an 833% increase over sales of 81,000 the same period last year. Earnings per share, though, reported a quarterly loss of 3 cents per
Can you
share.
send can you send me, where do you see this? I need to see
I'm reading. I am reading this from my Scott Trade account or from my trading account. I'm
Okay.
sure if you go to their website, it'll show it. Let me read more of their financial results. So if you just read the announcements too, you're going to live stream the call?
Yeah, I'm gonna live stream the call at 4:30. I thought we'd get it all right away. So,
Yeah.
all right, already not.
Typically they release and allow people to digest for a little bit, and then they do the call. So this
I'm having a
is
hard time finding this.
pretty
Okay.
standard.
Wait, how much was the revenue you said for the quarter? Six.
It was sales. I don't know if that's necessarily revenue or not. Let me read a little bit more.
Okay, wait, let me read the chat. Maybe they sent tell me where. Guys, where is, I don't know why I'm not finding it. I'm looking at their website, but it doesn't seem like it's on their website just yet. Yeah, it's not on their website yet. Okay, let me check on my Robinhood real quick. This is frustrating. I wanted to have it up and ready.
Let me look.
Okay. Well, honestly, from what I already sounds like, I don't like that low revenue. I was expecting like 1 million to see some growth. Their last quarter, they made 600,000. So if they're making what you said, 670, that is not a big improvement. Okay, actually, till it shows up, let me get to some of the comments here. We have a lot, so I'm gonna just kind of
Maybe
read.
run through the comments.
I lost a lot of money. Everyone is. I hope earnings go well. Personally, I think the issue is low volume. We need more hype online. Maybe after earnings come out, or if it is good, have a bunch of people post on Reddit or something. Where is our daddy Matan? What's up, big daddy? I have a lot invested. I'm hopeful. I think they need way more contracts coming in. That's what I want to see. I don't know if this earning talks about like what new partnerships and who are they, where is that demand getting fulfilled? Like we have a huge pipeline. Let's see some action. One city and one state isn't bringing much money. Hope they broke even or even made some. Yeah. Well, they are operating at losses. I don't think they're going to break even, but what we do want to see is revenue growth. That's really what I want to see. Like if they're operating in expenses increase a bit, that's fine, but make some more money. Is D's nuts here? I think he's crying. He didn't have. Oh, there we go. He needs his Lambo. Yeah, he doesn't have his Lambo money yet. With that amount of money, are you in me? Only 900 shares. I don't think you'll get a Lambo, anytime soon, at least. Hey Z Stacker, what's up? Long time, always on the live stream. I applaud you for that. Thanks for joining. Time to see if I lose on a lot of monies. 34,000 shares. That is pretty good. At 39 cents. That's good, bro. All right. I'll just skip around here. Wait, Mark, do you have a way to share with me, maybe a link or something?
I'm trying to see if I can find it, but we may just have to wait if you're going to pull it from their website. If you can't pull it from one of your,
do you have access to share screen? I'm going to refresh.
Probably do, but
here I can.
Okay, if you go to their website, news and events, press releases.
Okay, let me
They've got their reports, third quarter results.
Here, quarterly results. They don't have here. Q3 is not clickable yet. You know, it's not. Yeah.
News and event. Do you go to news and events press releases?
Oh, they have so many pages. Okay. Oh, awesome. Okay. How can I also have the live stream? I want to see the chat while I. Wait, am I not sharing screen right now?
I do not see your screen now.
Oh, why did I leave on this? No, I did not hit the gym today. Mark lives in my block. Is that true? Do you know who Big Daddy is?
Big Daddy, you in Georgia?
You know him?
I don't know.
He said he lives on your block. I don't know. He's just trolling. Okay. I'll get to the comments in a bit. Cool. I have the comments now, and I can see this. All right. Let's get to the main numbers. Oh, this is really small. This is it. Wait. There's 2025. Okay. Oh, it ends September 30th. All right. Oh, revenue 760. Wait. No. What is this 1.8? Oh, that's for the entire year. Okay, this isn't bad. We
Yeah,
have a
third quarter.
projection. Last quarter they gave a projection of 2 to 6 million for the entire year. If we're at 1.89, I mean we're basically at 2 million and we're not even done with the year. So we hit at least the minimum. Now, can we get to 6 million, the maximum? That would show big growth, but we're at least on trajectory. How's the stock doing? I wonder. Have people reacted to
It's
this?
up.
It's up.
Yeah.
Oh, back up. Oh, 39 cents. Okay. All right. People are reacting good. All right. Obviously, wait. How much expenses? 12 million of expenses. That is a big increase. 12
It's
million.
not necessarily a bad thing, though.
Last quarter we had 4.4 million in operating expenses. How much is our net loss? It is not a bad thing. It's not necessarily a bad thing. You're right. Actually, this 1.89 is total for the year. 760 is what they made for the quarter. They made 600 last quarter, so they really only grew in 160K for the quarter. That's actually not huge growth. While we went from 4.4 to 12, almost 13 million in operating expenses. I want to see what they say about that on the call. I mean, what's your take? It doesn't seem that great.
I'm honestly, since I am getting into this company and this is my first earnings call, I'm more going to just sit back and observe. Obviously, we went through we did the site tour a week ago. And, for everybody on this stream, I am deep in the negative at this point. I own 50,000 shares of this company, and I am perfectly okay with that at this point. I am not in a rush at all. This is a company, especially after last week's visit, give this company a couple of years and they are going to be far outside of where they're at right now. So, at least in my opinion, the losses I've incurred over the last few weeks, because obviously I bought in on hype, which obviously you sometimes FOMO can really catch you. And when it shot up to $1, I started buying in. So cost value dollar cost average down, and I mean that's basically my play. But like I said, I own 50,000 shares of this company. No, I own 60,000 shares of this company.
Well, I'm glad you say that and are open about it, because I think a lot of people who are listening are kind of in the same place as you, actually.
My take on it is, when I purchased it, and Matan, you and I were discussing it at the time, I was like, it's the cost of a car. That car isn't going to be worth anything in 5 years, but this company will be far worth more than what I paid for it. So it is what it is.
Cool. Yep, I agree. I'm in it for the long term, but full disclosure, I am up. I'm up 26% right now. My average basis is 30 cents and at 57,000 shares now. Um, yeah, I keep adding a little bit, but damn, I wish I just doubled down on that 35-cent drop, as probably everyone here does too. Although, let's see what they say at the call, because these numbers are not as promising. Um, let's see. Okay, I do want to talk about
I
something
mean,
like this.
you look at
760,000.
60 compared to 81,000. That's, you know, that looks fantastic on a
It does look
financial chart.
fantastic, but also if you look at Q2, last quarter we did 600,000 compared to 12,000 the year prior. What is 12,000, 81,000? Those are just like little test pilot numbers. Those aren't actual, the air, not the air SCWO actually making
So,
money. Right now, the 760 is
second quarter was 600,000,
second quarter last quarter was 600,000. Yeah.
and now they're up to 760.
Yep. Pretty
So
slow
you're
growth.
making in one quarter. Look at it from
I
a percentage. Look at it from a percentage standpoint.
That's true. That's
I
true.
mean, what are you wanting? Are you wanting
Yeah, I guess
five
I want a
million?
high tech growth company. I want Palantir numbers. Yeah, you're right.
Stand by. Give it another couple of quarters.
No, you're right. You're right. Let's see what they say about it all. Okay, that's fine. That's good growth. But what's concerning is going from 4.4 to almost 13 million in operating expenses. We need to know, what are these numbers. Here we have general and administrative. What is that? Is that lawyers? They did have a lawsuit. That's not good. Is that over? They probably going to talk about the lawsuit. Professional fees. Okay, that's probably the lawyers and stuff. I'm not sure general and administrative what that would be. Compensation, 6 million in employee based compensation, maybe. Research and development, that's fine. That's the happiest number I'm there for. That would break us even, 1.8, 1.8 ish. But the rest, I mean, it's just pretty big numbers. And how are they actually even affording that when we had, like, what's their cash at? See, now we're at a
Cash
okay.
and cash equivalents as of September 30th is 0.9 million, as compared to 10.7 million as of December 31st. As of September, working capital is 1.9 million compared to 4.5 million. So they're losing. Yeah, they're losing money. They need cash. Um, that's not it's not fantastic, but they've also, I mean, they did bring in more in sales. So
Yeah, and the amount of sales that they can grow is actually crazy. As Z Stacker says here, honestly, what I'm looking forward to the earnings is to know what matters, like he says, is what they say about potential contracts, and hopefully they can talk more about DoD, which I agree. And I think Mark and I's biggest takeaway from our meeting was just their potential and demand, like in new contracts and eyeballs on them, not from retail, from actual, not even institutional investors, from actual like municipalities, and even the EPA knows about them, and people are aware. It's just a matter of like, can they scale? Matan, I will get rich off Hover. I will buy an Audi R8 off SCWO. Yes, sounds awesome. Good luck to you, Big Daddy. And then you could drive that Audi R8 to your neighbor Mark Berry, who
yeah, I
will.
want to know this. Come on, where do you live, Big Daddy?
I'm. Oh, I'm still sharing screen, and okay. I'm just learning this, guy. Sorry, I'm new to this whole live streaming world. Let's get gotta
Yeah,
get learning.
do you have it set up to where you'll be able to stream the investor call?
Yeah, I should be able to. Yeah. You know what? I should test real quick right now.
Let's do
Uh,
that just to
in
make sure.
audio, I'll just play some YouTube video, and people can. Oh, you know what I'll do? You know what I'll do to really excite you guys? I'm going to play the intro to the tour that you guys are all waiting for. How about that? And see if you guys can hear that. That is going to be exciting. Wait, I have to make sure they can't see the URL though, because it's on unlisted.
Just do a YouTube video for right now.
Okay, cool. I got it in a way they can't see it. I'm on the app. All right. I'm excited. All right. It's on investor side. All right. Yeah, we got it now. All right. There's probably so many comments I haven't gotten to. We're going to just have to skip around later. But let me see. Oh, not really. All right. Let me know if you guys can hear. I hope you'll be able to hear this. No sound. Oh, wait. People are saying there's no sound. Wait, I'm not even sharing screen? Oh my gosh. Oh, I do not know how. This entire time, I think I wasn't sharing screen, Mark, when I was even looking at the numbers and stuff. Oh, I'm sorry, guys. Wow. We have 60 people tuned in here, and I am not on
It's all right. Don't worry about
it.
We'll learn as we go.
All right, we got like 8 minutes to go. All right, ultimately, I want to see if
let's do some tests to make let's do some tests to make sure that we can actually live stream the call.
Yeah, I should be able to.
And there's me with my legs spread wide open like a. Get that off the screen. Oh, that's bad.
Okay. Nope. I probably have to do something in the settings here. Good thing we fixed that. Damn, I can't believe that. The audio didn't work. All right. Maybe it's because it's on YouTube.
No, it should be fun. Just try to like stream a.
Stop here. I'm sorry, guys. Damn.
How are they doing their call?
I'm gonna figure it out. But can you maybe just get to the comments, start reading some of them, and talk to people? Let's see what's up while I figure this thing out. There has to be
Sure.
I gotta reach out.
People said they could see the screen. Video's okay. Can you just play the earnings call? The music has already started. No sound. Can you work on that? No sound though. So we need to basically. Are you?
The music started. Call? Let's see if they can hear that. That's right. I muted it. That's right. I muted it. The live is a little bit delayed. That's right. I muted it. Oh, God damn it. I didn't even share screen. Okay. Oh, God damn it. I didn't even No. Okay. Oh, God damn it. Well, this will work. That's bad. All right, I have to figure this out right now. Good. I got 5 minutes. I'm sorry.
Where is this at? Is this investor presentations? Like, could I potentially do it from my computer?
Yeah, try. You can share screen.
I should be able to. Just where do I get to where you were at?
Here, I'll send you the direct link. Well, you do have to sign up and make like a little quick account, but
Okay. If you won't put it in our private chat.
There you go. Yeah, I'm sorry guys. Let's see. What platform are you using to stream? I'm using StreamYard. I know OBS. I used to use OBS and it works perfectly fine. But sound was there for a second. Yeah. If we come to the time, I'm just gonna start by I just turned the microphone to my TV, and then you heard the TV through the microphone. So
Let me try something real quick.
that was just his phone, I think.
Let me try this real quick, okay?
Yeah, go ahead. It must be in the StreamYard settings, honestly. I need to see what I'm doing wrong.
Okay. Are people able to see that?
Yeah, there. Oh, I can hear it too. There we go. Wow.
Right. Okay. So then, if that's the case, so when we start, we want to mute so that we're not interrupting. So make sure you mute your mic when they start.
Yeah.
Okay.
Yeah. Perfect. Awesome. All right, we got 3 minutes. So, wait, can you guys hear? I can hear on my end, but that's because I'm here. Image and sound is okay. Awesome. Thank you, Mr. Tebow. Thanks for joining us too. Okay. So, I guess you guys are not getting the intro. You guys will just get the video tomorrow, our tour tomorrow at 7:30. I'll be premiering it actually, so we can kind of watch it live together, comment together, and you can ask any questions as we kind of go. Let's see. So what we really hope they talk about, honestly, is a clear plan is what I want to see. Clear revenue plan. Clearly, they're losing money. The revenue is growing. I want to see, some of that pipeline get to action, talk about some new contracts, partnerships, yada, yada, and also address the elephant in the room, the dilution concerns. If you look at their earnings, clearly they've been diluting in the last quarter, and reverse split is not far away from reality. So I want to hear about some of that. I hope they address all of that. And a lot of that, some of that actually we did address on the site tour. So you'll be getting some more info tomorrow to look forward to. But this is more important. And let's see, ultimately we just want some good positive momentum and some good guidance this quarter. I'm excited. Mark, is there anything you want to share before we start here in 1 minute?
Big Daddy Buyer says, sorry guys. Big Daddy Buyer says that, can you hear me?
Yeah.
Yeah, it says need better marketing. Well, hopefully our tour will really help that.
Yes. Tom, what's up, Tom? It's my buddy. Can't wait. Yes, Tom is my friend. He invested in SCWO before a lot of people here. He got in early, like me, at the 20-cent range. So that's pretty cool. He's excited too, I bet. Alrighty. It is 4:30. Drum roll. If we have some bad news, we're gonna. If we have some good news,
let's not. No, let's not do that. Don't do that. Let's just let them talk.
Yeah, I'm joking. I'm just messing around, playing around with this stuff.
That jacks up my ADD.
Hey, we got a bunch of retail investors here. They love the meme stuff. Like,
yeah. Here we go.
374 Water third quarter 2025 financial results conference call. At this time, all participants are in a listen-only mode. A question and answer session will follow the formal presentation. As a reminder, this conference is being recorded.
Can we just get a
At this
thumbs up
time,
that
I
people
will
can
turn the
hear
call over to Jim Siccardi, Senior
in the
Vice
comments?
President of Investor Relations at 374 Water. Please go ahead, sir.
Thank you, operator. Before we begin the formal presentation, I would like to remind everyone that statements made on this call and webcast may include predictions, estimates, and other information that might be considered forward-looking. While these forward-looking statements represent our current judgment on what the future holds, they are subject to risks and uncertainties that could cause actual results to differ materially. You are cautioned not to place undue reliance on these forward-looking statements, which reflect our opinions only as of this date of the presentation. Please keep in mind that we are not obligating ourselves to revise or publicly release results of any revisions to these forward-looking statements in light of new information or future events. Throughout today's discussion, we will attempt to present some important factors relating to our business that may affect our predictions. You should also review our most recent Form 10-Q and Form 10-K for a more complete discussion of these factors and other risks, particularly under the heading Risk Factors. Your host today, Interim President and Chief Executive Officer and Board Director Stephen Jones and Chief Financial Officer Russell Klein, will present results of the operations for the third quarter ended September 30th, 2025. A press release detailing these events crossed the wire this afternoon at 4:01 p.m. Eastern Time and is available in the Investor Relations section of the company's website, 374water.com. With that, I will now turn the call over to 374 Water's Interim President and CEO and Board Director, Steve Jones.
Thank you, Jim. Good afternoon, everyone, and thank you all for joining us today. We very much appreciate the support, collaboration, and constructive feedback from shareholders, as your active engagement demonstrates your commitment to 374 Water's mission. Before we begin, I'd like to take a moment to introduce myself to those of you whom I've not had the opportunity to meet yet. Last month, I accepted the board's request to serve as Interim President and Chief Executive Officer, in addition to my role as a Director of the company. As Interim CEO, I'm focused on leading the 374 Water team on its continued commercialization of our proprietary supercritical water oxidation technology, or SCWO, as we like to call it, and accelerating conversion of our growing pipeline of opportunities, including the further development of our waste destruction services business. My goal is to turn our immediate opportunities into profitable deals and deliver value to you, our shareholders. I was asked to assume this role owing to my extensive experience as an operating executive with expertise in the waste and environmental services spaces and in the development of own and operate on-site business models employed in the industrial gas and chemical sectors, which is very similar to 374 Water's waste destruction services model, which you've heard us speak about in the past. Previously, I was Chief Executive Officer of Covanta Holding Corporation. That company is now owned by private equity and renamed Reworld Waste. Reworld is a world leader in developing, building, owning, and operating waste facilities and providing environmental and clean tech services. I led Covanta through a rapid growth phase focused on owning and operating waste destruction facilities and acquiring environmental services companies, providing waste and wastewater services to third-party customers. Prior to that, I was with Air Products, which was an early adopter in owning and operating on-site facilities at customer locations globally, a model which will be an important part of 374 Water's strategy going forward. This role with 374 Water is an opportunity to step into a company that I firmly believe has significant value creation potential and incredible demand for its facilities and services. I appreciate the board's confidence, and I'm excited to lead the 374 Water team on this journey. With that, let's jump in. As many of you know, 374 Water is an industrial technology and services company providing innovative solutions for the destruction of solid and liquid organic waste across the industrial, municipal, and federal markets. waste like PFAS to forever chemical. Our SCWO technology is designed to efficiently destroy a broad spectrum of non-hazardous and hazardous organic waste, producing safe dischargeable water streams, safe mineral effluent, safe vent gas, and recoverable heat energy in the process, and has the potential to assist our customers in meeting discharge requirements, reducing or eliminating disposal costs, and reducing other risks. Our flexible strategy includes several commercial options for our customers. First, the provision of waste destruction services, or we sometimes like to call it WDS. And I think of this as the own and operate business model I spoke about in the industrial gas industry a few minutes ago. Second, we get involved in capital sale of equipment to our customers. And third, potential lease options. That would include the opportunity for 374 Water to also provide long-term operating and maintenance services to our customers. So this is another form of recurring revenues. I want to be clear, and I have to be clear with our business development team on this issue. I prefer the waste destruction services model as it produces stable, recurring revenues and higher EBITDA margins for 374 Water. We're targeting the waste treatment market, which, including the destruction of PFAS and other forever chemicals, is roughly $450 billion. Most companies couldn't even imagine an addressable market of that size. And it presents a significant growth opportunity for us over the next few years. The size of the market and the urgency related to dealing with issues like PFAS destruction create significant demand for our facilities and services and should generate a strong, profitable revenue stream for the company for the foreseeable future. Moving on to our operational highlights and business updates. I'd like to discuss some of the team's many accomplishments. During the third quarter, we signed a waste destruction services collaboration agreement with Crystal Clean, a leading provider of environmental and waste management solutions. We're excited about working with Crystal Clean at their Oregon, Ohio location as we introduce our waste destruction services business at a transfer, storage, and disposal facility. These are a lot of times you'll hear these, they're called TSDF facilities in the industry. We expect our waste destruction services business to address growing demand across a wide array of market verticals and waste streams. And this agreement serves as a model for future collaborations to create a national network TSDF partnerships with companies like Crystal Clean and other similar companies that work in this space. We expect that this is the first of many similar arrangements in the industrial waste space, as this is a large market segment that is underserved. In Q3, we successfully deployed our SCWO technology to a Colorado School of Mines and Department of Defense project aimed at comparing technology solutions for the destruction of PFAS-contaminated waste. We treated PFAS impact sediment from the Peterson Space Force Base. We believe this initiative demonstrates our ability to destroy PFAS-impacted waste streams as a treatment option for DoD installation. And note, we're awaiting the final report on this project so we can provide additional technical details to the marketplace. We also successfully completed a commercial scale field demonstration at Clean Earth's Detroit facility as part of a DoD project. For 6 weeks, we executed PFAS destruction of multiple concentrated waste streams at a commercial TSDF site using an SCWO 6 unit, once again demonstrating the effectiveness, scalability, and versatility of our technology. This project represented a major step forward in our effort to provide the DoD with commercial PFAS treatment options for a variety of scenarios and waste types. We expect this project to open up a number of additional DoD projects for us in the future. More recently, we secured an order from the city of Olathe, Kansas, for the sale and deployment of an SCWO 6 unit and the related pretreatment and dewatering system. Olathe will use the AirSCWO process at its wastewater treatment facility and assess its potential as a sustainable alternative to traditional sludge management practices and disposal methods, like landfill application and landfill disposal, which are becoming more difficult to utilize for these types of customers. Olathe will deploy the system to treat various waste streams over a 6-month period, after which they will determine the potential to further scale 374 Water's technology at their facility. We recently began processing an award by the state of North Carolina for waste destruction services to destroy aqueous film forming foam, or better known as AFFF in the market, utilizing our AirSCWO technology. In the first phase, and we're in this process now, we'll process 1,000 gallons of AFFF for North Carolina. And as I mentioned, we're doing that now. If selected for the second phase, we could treat up to an additional 28,000 gallons of AFFF. With millions of gallons of AFFF in the US, and even more globally, if you think about Europe, needing to be eliminated or destroyed, this award is an opportunity to show the market that our technology can be the solution for AFFF liability and returns that are advantageous to the company. As you know from prior calls, we are preparing for our AirSCWO 6 system deployment to the Orange County Sanitation District, or OC-SAN, in California. And we expect to complete our factory acceptance test in the fourth quarter. We continue to be focused on late Q4 2025 or early Q1 2026 to start up this unit. We have undertaken certain system upgrades to the AirSCWO 6 unit over the last month or so to improve system performance and ensure our successful completion of the factory acceptance test. Things like improving our waste reactor in our AirSCWO unit and adding a heating block to the process, all of which will lead to improved performance and throughput for the AirSCWO 6 unit. OC-SAN remains committed to working together with 374 Water on the evolution of AirSCWO technology to address their ongoing treatment needs. Also note that during the quarter, we took several initiatives to strengthen our balance sheet and support long-term shareholder value. Most recently, we fortified our balance sheet from our at-the-market, or ATM facility, which resulted in gross proceeds of approximately $7 million, extending our cash runway into the second quarter of 2026. Also note that certain officers and directors purchased shares of 374 Water in the open market in the third quarter, further evidencing their positive view of the company. Talk about hitting two very important milestones that will greatly impact revenue in 2026. The commencement of the first phase of our award by the state of North Carolina, pursuant to which we will be providing waste destruction services related to AFFF, and the sale of AirSCWO 6 unit to the city of Olathe. I believe that both of these awards provide validation to our alternative business models, whether waste destruction services, a capital sale of equipment, or a lease of an AirSCWO unit to a customer. Taken together, along with our anticipated startup at OC-SAN, we now have a line of sight towards 2026 revenue that is expected to be in the $6 to $8 million range. That is a 50 to 100% increase over our expected 2024 revenues. And note that this does not include additional opportunities in our pipeline that we're working on to monetize during fiscal year 2026. So I believe we're setting ourselves up for a very successful 2026. Finally, on a more personal note, I'd like to formally welcome Jim Siccardi, who is on his first 374 Water earnings call. Jim is our Senior Vice President of Investor Relations. Jim has been an investor relations expert for over 20 years and has focused his entire career on driving shareholder value, strategic growth, and market expansion within the energy, natural resource, and industrial sectors. Jim is an expert at developing relationships with investors and will work to raise awareness of 374 Water and our related market opportunities. Expect to hear more from Jim as we further advance our business plans at 374 Water in 2026. Now, with that, I'll turn the call over to Russell.
Thank you, Steve. As Steve mentioned, we are aggressively pursuing our three-pronged business strategy: waste destruction services, capital sale of equipment, or lease of equipment based upon customer business needs. Based on internal assumptions and modeling, we estimate our mobile SCWO 1 unit has the potential to generate more than $2 million in annual revenue, as the mobile fleet will generate higher tipping fees due to the nature of on-site waste destruction services. We will naturally increase the size of this mobile fleet as the market expands. Also, based on our internal assumptions and modeling, we estimate our SCWO 6 unit has the potential to generate $3 to $5 million in recurring annual revenues with attractive operating margins. We plan to initially utilize the SCWO 6 units at TSDFs to provide waste destruction services. We also plan to utilize a modular solution in building these types of SCWO units in order to both lower our capital costs and be quicker in delivering these units to our customers. Once ready, we plan to utilize SCWO 30 units at TSDF partner facilities to dramatically increase our waste destruction capacity, decrease operating costs, and increase revenues. It's important to note the revenues I just highlighted are based on non-hazardous waste tipping fees. We expect that tipping fees associated with processing hazardous waste with our SCWO units will be materially higher and will increase returns on these assets. We are excited about the waste destruction service opportunity to drive shareholder value. For the third quarter of 2025, revenue increased to $760,000 compared to $81,000 in the prior year. Our business has been focused on the development and commercialization of our SCWO units to fulfill ongoing projects. Revenue generated was primarily from waste destruction services. The approximate $679,000 increase is primarily due to an increase in our service revenues of approximately $643,000 from the completion of waste destruction service projects and $36,000 in equipment capital revenue. Total operating expenses increased 64% to $4.6 million for the 3 months ended September 30th, 2025, compared to $2.8 million in the prior year period. The increase was primarily due to material increase in commercial activities, including deployments and projects to be delivered. We are focusing our resources on the manufacturing and operations side of our business from a cost standpoint. There was a $0.9 million increase in compensation and related expenses, an increase of $0.3 million in research development, and an increase of $0.8 million in general and administrative expenses. Net loss for the 3 months ended September 30th, 2025 was $4.3 million as compared with $2.7 million in the prior year. Cash and cash equivalents as of September 30, 2025 was $0.9 million as compared to $10.7 million as of December 31, 2024. As of September 30, 2025, working capital was $1.9 million compared to $4.5 million as of September 30, 2024. In September, the company entered into a $600,000 short-term promissory note, which we expect to repay in January 2026. Based upon our current cash position, including the $7 million raised from the ATM facility that Steve mentioned earlier, and expected billings and related collections, we project to have adequate cash to support our business plans into Q2 2026. To deliver on the planned business growth, we will require additional capital and are actively pursuing additional capital raising opportunities to fund waste destruction services and our strategic growth initiatives. The company is currently actively engaged with potential investors and possible strategic partners to fund these capital needs. Looking to the remainder of 2025, our revenue projection is $4 million in revenue based upon year-to-date activity and expected project milestones for the fourth quarter. As discussed, we have completed our DIU project and our Peterson Space Force Base DoD work, which were both recognized in Q3. Importantly, we continue to make progress in our Orlando biosolids destruction project and our OC-SAN factory acceptance test and deployment to California. In addition, as noted earlier, we have begun processing the North Carolina AFFF at our facility in Orlando. Finally, we expect to recognize a portion of the revenue related to the capital sale of equipment to Olathe later this year. Based on current and anticipated future demand and the fact that we are beginning to convert our commercial pipeline into actionable backlog, we project revenue to be in the range of $6 to $8 million in calendar 2026, with growth in both the waste destruction services and capital sale of equipment. One final item I would like to highlight. The company recently filed a proxy statement with the Securities and Exchange Commission in connection with the company's upcoming special meeting of shareholders to be held on December 15, 2025. The purpose of the special meeting is to request that stockholders approve amendments to the company's certificate of incorporation to effect a reverse stock split of our common stock. As many of you know, in July 2025, we filed a Form 8-K highlighting for investors that the company's stock listed on NASDAQ had been trading for less than $1 per share for more than 30 consecutive trading days, and therefore the company was not in compliance with the bid price requirement of the NASDAQ listing rules. The company must regain compliance by January 12, 2026. The company's goal is to meet the NASDAQ requirement by executing on normal business operations, but if we are not successful, the board felt it was appropriate to request shareholder approval to effect a reverse stock split at the board's discretion to ensure that we maintain our NASDAQ listing. If the reverse stock split is approved and we maintain a trading price above $1 for at least 10 consecutive trading days, then we expect to maintain our listing on NASDAQ. The board of directors of 374 Water believe it is important to remain listed as a publicly traded company on NASDAQ. Among other things, our NASDAQ listing will greatly increase the company's access to capital markets, like use of our ATM, which has been important to our ability to, to obtain sufficient working capital to finance our ongoing operations. A reverse stock split will also improve trading liquidity by increasing the price per share of our common stock, which could enable a broader range of institutions which may have a minimum level of price restriction to be able to add 374 Water to their portfolios. It also allows the company to potentially pursue alternative financing options as we grow our business. The board and management team remain fully confident in 374 Water's long-term prospects and view this measure as one of several potential steps to strengthen the company and position it for future growth. I will now hand the call back to Steve for his closing comments. Thank you.
Thanks, Russell. I appreciate it. I've been asked by many of you where I'll focus my attention in the immediate future. And I think there are two specific areas I'd like to drive improvement. First, I believe we need to continually improve on the throughput of our SCWO units. The ability of our SCWO technology to effectively destroy PFAS is well known now in the marketplace. However, as a company, we need to continue to drive improvement by using tools many other larger companies use, like Lean Six Sigma, so that we can process more PFAS materials through our units. We're spending a great deal of time and energy improving in this area right now, and are currently making several important upgrades to our SCWO units. As I noted previously, we've had great results with the destruction efficiency. A lot of times it's non-detectable or 99.999% destroyed. And now we need to go up that continuous improvement curve as it relates to throughput, making sure that we can process increased volumes of materials. Higher throughput means higher EBITDA margins. Second, we need to focus our resources. We're not a very large company. We have about 50 employees or so at this stage. And as I've said, there's a vast market for destruction of PFAS and other organic waste out there in the marketplace. So we need to focus our business development efforts on those opportunities that have the highest likelihood of success and the greatest return on capital for our shareholders. I'll be spending my time working with the business development team, and I've started it already, to focus on those opportunities where we can be most successful and get the highest returns. Recently, I had the opportunity to speak with a lot of the employees on a trip down to our Orlando facilities, and it was very exciting. I was really impressed with the talent and the passion of our team, and they're very dedicated to making 374 Water a success. So I see a very bright future for the company. Finally, as I mentioned earlier, we anticipate 2026 revenue in that $6 to $8 million range on a combination of waste destruction services and capital sale of equipment to our customers. This is a 50 to 100% increase in revenues over our current 2025 revenue expectations. So we're growing fast, and I expect that to continue in the outlying years. So I'd like to thank everyone for joining us today. I appreciate your taking the time to listen to the 374 Water story. And I'll now hand the call over to the operator to begin our question and answer session. Thanks again. Operator, please go ahead.
Thank you, sir. We will now be conducting a question and answer session. If you would like to ask a question, please press star then one on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star and then two if you would like to remove your question from the queue. For those on the webcast, please submit your question via the webcast platform now. The first question that we have comes from Rob Brown of Lake Street Capital Markets. Please go ahead.
Good afternoon, and congratulations on all the progress.
Thank you.
Maybe first on the TSDF facilities, you've got the first one kind of going now. How is the pipeline in that segment? I know it's a large segment. What are sort of the steps to getting that pipeline going? And I assume it's one of the main areas that is worth focusing on. But what's the pipeline there?
Yeah, so there's a lot of TSDF facilities in the U.S. And there are also many more material processing facilities. TSDF. So I operated I operated a lot of these when I was at ReWorld. TSDF basically deals with RCRA, so hazardous waste material, and so we're in discussions with a number, maybe a majority, I'd say, of the TSDF operators in the U.S. right now about putting SCWO units on their site. And so Crystal Clean was the first one. We have discussions underway with others, and I know a lot of the operators since I operated in this space. So I've reached out to my network to see who's interested in utilizing our technology to destroy PFAS. There's not a lot of good options that are out there at this point, and our technology, like I said, is very efficient in destruction. And so we're going through that process now. So our business development team, and I've been kind of riding them recently, is I've been making sure that they're following up with the various TSDF owners across the U.S. and seeing who wants to partner with us in this process. But ultimately, I see us as the TSDF being a host customer. And again, it's a lot like the industrial gas business model, the own and operate on-site business model, where we're going to put one of our units on their site. They'll probably have some access to the unit for their own PFAS needs. And then we'll also bring PFAS in from, let's say, the federal government, Department of Defense, AFFF, for example, and we'll process AFFF through the SCWO unit. So, like I said, there's a number of opportunities that are out there, and that's in the hazardous side. On the non-hazardous side, as companies, and again, there's public companies like Clean Harbors, for example, and there's a lot of companies out there that play in this space, as does ReWorld, my old company. As they start to look at how they're going to destroy non-hazardous material, they can also use our SCWO technology at these material processing facilities, and there are a lot of those in the U.S. I mean, it's a very large market. So that's what we're going through right now. We're basically looking at the various leads, and as I said, what I really want to focus on is those opportunities that are closest in, and that will lead to the highest internal rate of returns. So return on capital for our shareholders.
Okay, excellent. And then I guess second question on the North Carolina contract. I know you're doing the first phase, but how is that phasing set up, and what's the timeline on sort of the second larger phase?
So the first phase is 1,000 tons, or excuse me, 1,000 gallons of AFFF. We're in the process of putting that through the unit now. We started that last week, so we're 2 weeks into it. Once that gets processed, North Carolina, and they have representatives from UNC and I think also NC State, who are out periodically at our facility, and they're taking samples and doing various technical readings. They'll take that back and start to give some thought to how they get rid of the 28,000 additional gallons that they want to process. So that's how it'll play out. I'm not sure exactly what the timing of their decision making will be, but like I said, we're in the process now of destroying AFFF, and it's working well.
Great. And I guess last question on the 26 outlook, good growth there. How's the how do you sort of see the mix of business in that number between the waste services and the capital sale?
So why don't you answer that? You're probably closer to the mix in 2026.
Sure. Thanks, Steve. And Rob, thank you for joining us and for your questions. For 2026, we have a mix between our launch and expansion with waste destruction services, and then the capital sale that we recently announced for Kansas, as well as expected capital sale for another project that we have out for bid. And then, as Steve had mentioned earlier, there are other opportunities that we are actively pursuing that we would look to build into 2026 as we continue to progress in those discussions.
Okay. So you're going to see, Rob, over time, and I brought this up, sorry to jump in. I brought this up, a services business, so waste destruction services business, is going to provide higher EBITDA margins and then ultimately a higher valuation for the company. It does require more capital because you own and operate the asset. Sale of capital equipment will bring in cash more quickly. But it doesn't, but you got to sell, and the sale of equipment business, which I've run both of these types of businesses in my career at both Air Products and also at Covanta / now Reworld. A sale of equipment business, you got to sell equipment every year, and the margins aren't as high, and the valuation of sale of equipment companies is not as high either. So ultimately, my vision is we push this company towards waste destruction services. But we will meet the customer where they sit, because there are certain customers, if you think about municipalities, that are going to want to own their own asset. And in those cases, I think the play is, and we want to have an O&M agreement, an operating and maintenance agreement, operate the equipment for them, maintain the equipment for them. Much like, if you remember GE's turbine business, right? You bought the turbine, but you signed up for a services agreement. And so that's my vision on, if we go down the sales route, how we get more recurring revenues with customers who want to actually own the equipment versus my preferred case, which is 374 Water owns and operates these SCWO units.
Okay, great. Thank you. I'll turn it over.
Thank you. Appreciate the questions.
Thank you. The next question we have comes from Michael Matheson of Sidoti. Please go ahead.
Congratulations on the revenue, you guys.
Thanks, Michael. Appreciate that. We've been working hard. We've been working hard.
So coming back to waste destruction as a service, because I tend to agree with you that that's going to be a much higher source of profit for the company going forward. Can you just give us a little bit of detail on the Crystal Clean deal, particularly the revenue sharing agreements, things like that?
So I am reluctant to provide commercial terms in on our earnings calls. I will tell you about the deal, but I prefer not to get into details because I don't want my competitors to know what or future deals, folks we do deals with, to know what the terms and conditions are. This is my view on a waste destruction services project. We're going to have a host customer, and in this case, it's Crystal Clean. And as the host customer, they deserve some benefit. And they can take it in a lease payment, they can take it in a revenue share, or they can take it in lower lower cost to utilize the SCWO unit. And I talked recently to another TSDF operator who has multiple sites along these same lines. And so I'm indifferent on how they want to take their host fee, if you will. But that's how it'll play out. It'll be one of those three buckets. It's a bag of money, and however they want to take it is fine by us. Ultimately, what we need is a site where we can bring in our own PFAS-laden material, and I think mostly the government trying to get rid of their AFFF. There's a large market there, and I mentioned it during my prepared remarks. Whether it's in the U.S. or even outside the U.S., there's a large market there. So to the extent that we can bring AFFF in and process it at an SCWO unit at a host site is going to be, I think, very valuable to us. So that's how those deals are going to be structured. They're very much like the industrial gas business. And I mentioned I spent a number of years at Air Products. We call these types of deals piggyback deals, which was basically we put our facility on a customer site. They took some of the output from the facility, and we took some of the output from the facility. It's the same concept here. And if you look at returns in those kinds of business, EBITDA margins are much higher than sale of equipment, and at company valuations, and you guys can run a valuation model on Air Products or look what it trades for on a PE basis. Those types of companies are much more highly valued in the marketplace than a simple sale of equipment company.
Great, thank you. Just looking to the growth of 374Water going forward, you mentioned you have about 50 employees now. How many of those are salespeople? I'm sorry?
So this is a great question because I just asked this question. Again, I'm new, so I asked this question the other day. 80% of our employees fall into, I'll call it market-facing organizations. 80% of the employees, and this includes both number of employees and the cost of the employees, because I think there's been a view out there that we're somehow top-heavy or our burn rate's too high. But 80% of the employees are focused on either operations, manufacturing, R&D, or business development, which shows you that we are focused on delivering into the marketplace. Now, right now, I'd say on a business development standpoint, and I'd like to add a few people here, we probably have about 7 business developers that are out there trying to sell our technology. I think we could probably use a few more to penetrate the market faster, is my personal view.
Great, thank you, very helpful. My last question just looks to your 2026 guidance. It looks to me that in Q3 year to date, you've hit break-even gross margin essentially. When I did some back of the envelope arithmetic, it looked like the midpoint of your revenue guidance, about $7 million. That might be pretty close to hitting operating income break-even for 2026. Does that feel feasible, or would we be better to look to 2027?
So a lot depends on the pace of the rollout of the technology and the business plan. As you know, and I've mentioned this, it's a very large amenable market. So there's a lot of possible deals. And we're gaining traction, and that's why we spent a lot of time on this call already talking about the several types of business models and deals that we were able to land already. The pace of these contractual arrangements and the types of deals we undertake will have a big impact on that timing you're asking about. Also, as we load up our manufacturing and operation system, and I just mentioned 80% of the people work in that market-facing group, so as we sell more units or we do more waste destruction services, that fixed cost there will get loaded up higher, and that will all positively affect the overall timing of when we go cash flow positive. So I think it's tough to say right now. I think from where I sit today, my hope would be that we become cash flow positive in the 2027 timeframe. But it's a tough question to answer at this juncture. But you can see how I'm thinking about it. We got to load up our system with more and more deals. And that's why I've said I'm focusing the business development team on deals that are closer in and have a higher return on capital for our shareholders.
Well, great. Thank you. That's all very helpful. So I'll just wish you good luck for next quarter. Thanks again.
Thanks. I appreciate that.
Thank you. There are no further questions on the conference call. We will now turn to the webcast questions.
Our first webcast question asks, can you provide us some additional color on the third quarter performance by 374 Water?
Sure. Yeah. So sales are accelerating very nicely. I think you picked that up in my prepared remarks. Year over year, or I should say quarter over quarter. So quarter 3 2024 versus quarter 3 2025, revenues were up significantly, but admittedly off a low base. With that in mind, we're confident in meeting this 2025 revenue target of approximately $4 million. And I think that's really good performance by the team. You saw we introduced 2026 guidance, which is funny because we had a discussion, because normally I wouldn't, other times I've done this at other public companies that I've run, I wouldn't give guidance this early. But I thought being a new CEO and from what I've seen so far, it probably makes sense to give the guidance at this time of the year. So the guidance of 6 to 8 million in revenues for 2026, that range. I think that range is very good. It's 50 to 100% higher than our expected 2025 revenues. So I think this shows investors that we believe our technology is taking hold, and the customers are valuing our offering. So we're getting really good traction in the marketplace. I won't go through what I did in the prepared remarks, which was these various deals. I think I was already clear that, my preference would be to have more of a service business than a sale of equipment business for obvious reasons, because the returns are higher. And you'll see me pushing in that direction as we move forward. I just think that's a more valuable. We'll get a higher multiple in the marketplace with a service-based deal than a sale of equipment-based deal. But all very promising, I think, and very promising signs to investors that things are moving in the right direction. We also had another recent deal that we won. I'm going to be a little coy like I was last time. I spoke previously to some folks about this. We're going to have a press release coming out, so I don't want to say a lot about that. But we have another deal that we were awarded over the weekend, and we'll be announcing that in the near term. So again, I've been pleased with what I've seen so far as we take what is a very large pipeline of opportunities and start to turn that into revenues and then ultimately EBITDA.
Our second webcast question asks, you've been interim CEO for a little over a month. Do you have any additional observations other than what you've spoken to previously or on this call?
Sure. I think first off, we have a first-class team of employees. And I mentioned, I think they're really dedicated in making 374 Water a success. They're focused on ensuring our technology is effective in the destruction of organics like PFAS, and we've had amazing, extraordinarily good destruction results so far. Also note, because I think there's some confusion in this area, and I mentioned this a little bit already, is that we're trying to focus most of our resources on that market-facing part of the organization. And I mentioned that a little bit already. We're also focused on continuous improvement. I mentioned Lean Six Sigma. I'm a green belt from my Air Products days, and I think that's a good tool to be able to drive additional throughput through our SCWO units. And one of the things that we've been doing over the last couple of weeks is making some changes to our reactors in order to drive more throughput through those reactors. So we've made some changes to our reactor. We've added a heating block in one case in order to be able to increase the throughput through those units. More throughput, as I said earlier, means more EBITDA. And so that's a key observation I've had so far, that we have to do better in that area. So I think they're the main, the main points that I'd like to bring up. I will say that in around pricing, this is a new market, and so we're undertaking a pricing study now. We're just getting ready to kick that off, so that we can develop an economic model. And we've started to put the economic model together that allows us to toggle or alter a number of factors related to value, like pricing, so that we can get the highest internal rate of returns on our projects. And so in short, I want to focus on those projects that are bringing the greatest value to our shareholders. And at the same time, as I said, focusing on continuous improvement, particularly around making sure that our units, the throughput in our units continues to increase as time goes on.
And our last webcast question asks, what is your view of the PFAS destruction market?
Well, it's a massive market, as we've talked about. The waste destruction market alone is $450 billion, and most companies would be jealous of that kind of amenable market. And PFAS is part of that market. And then second, there are verticals within that market, and there's different solutions or business models for different verticals. So if you think about industrial wastewater players like Crystal Clean, or Clean Harbors, or Veolia, or ReWorld, which is my prior firm, and dozens of other players in this space, they could all be customers of 374 Water. They collect liquid waste from their customers. That's what I did when I was at ReWorld. And we needed a vehicle to destruct or destroy the organics like PFAS. So that's one vertical, and it's a big vertical. But then there's also another massive vertical, which is the municipal market. Customers we've been actively involved with already, like the Orlando Water Reclamation folks and OC Sand, or the new project for the wastewater treatment plant in Olathe, Kansas. You can look at our recent press release around that. These customers have biosolids and sludges that contain PFAS, and they need to deal with the issue. Their previous solution was putting stuff on the land, and there's a lot of legislation now coming out that prevents that from happening. And so we have a solution for them, and we're talking to many of the municipalities in that vertical. And then finally, the federal, state, and local governments all have large stockpiles of AFFF, and they cannot use that material anymore for firefighting, and it's got to be destroyed. And so there's a large market here, and I mentioned Europe, probably also even Asia. We haven't even explored Asia yet, that have similar PFAS issues that need to be addressed. And there aren't many folks out there like us that have a technology that has such effective destruction to deal with these three different verticals. And so one of the things I'm doing with our business development team, and somebody asked this question earlier, is we're getting a lot more organized around those three verticals, and the pricing may differ in those verticals. And that's why I'm going through a pricing exercise now to figure out what's the right pricing in each of those verticals, and what does our competitive landscape look like. And again, driving so that we get the highest returns that we can on our SCWO technology, so that we drive up our multiple for our customers. Or excuse me, multiple for our investors. Sorry.
Thank you. At this stage, there are no further questions. I would now like to turn the call over to Mr. Jones for closing remarks. Please go ahead, sir.
Thank you, operator. I would like to once again thank each of you for joining our conference call today. We look forward to continuing to update you on our ongoing progress and growth. If we were unable to answer any of your questions, please reach out to Jim Sicardi or our IR firm, MZ Group. We would be more than happy to assist. This concludes our third quarter 2025 update call. Thank you for your participation.
Thank you, sir. Ladies and gentlemen, that then concludes today's conference. Thank you for joining us. You may now disconnect your lines.
We got through it. That was cool. That was exciting. Very interesting. Quite a few things to go over. There were a few things that I was a little bit questioning, but first earnings call, hearing from them. Most of them are new, and it's very exciting to see that they are quite optimistic, obviously, as we all are. But obviously, the biggest concern here is capital constraints. So, before I get to some of the comments here, Mark, any thoughts?
Yeah, I'll agree with you on that. In terms of the capital constraints, I mean, they're in that phase where if they can have the capital to grow out, well, I think it's obviously a two-pronged approach. Like they talked about their 1,000-gallon phase one with North Carolina. They need to get through that and get to that phase two. Prove that they're successful, and then get to the phase two where they're then going to process 29,000 gallons of waste, and that each one of those will just be continuing stepping stones of progress for them. We follow the eVTOL market pretty closely. And I was thinking while they're on the call, like, where does this company compare to like a Joby or an Archer? And quite honestly, when it comes to revenue streams and growing out, they're much further along. They're at that phase where they're already getting into market penetration, and the market is feeling them out. So, like you said, they did their initial sale to Olathe, Kansas. That's such a horrible name. They've done the initial sale, and now they're like, Kansas is looking at that first sale that they've done, and they're observing it. So and then if that's going to be successful, they said they're going to be making more orders. So for them, it's just a function of they're at that starting phase of market penetration, and once the market starts to recognize what they can do, then I think they're only going to grow from here. They're only going to go up from here.
I agree.
It all just comes down to their cash. Can they keep operating? And this ties into them, saying on the call, they're going to need to do a reverse split. And there's a comment that Fat Dog 6 just said, I hate to say a 10 to 1 reverse split incoming. Okay, but it's not like you've lost your value. Granted, your percentage is still there. And if it positions them to be in a place where their stock price is higher, a reverse split is horrible if a company is dying. A reverse split is not necessarily horrible if a company is on the up and up, which I think this company is on the up and up. Especially from everything we saw when we were at the tour. It allows them, like they said on the call, to if they can get their stock into that $5 to $10 range, it opens them up to then go and talk to large institutions that could come in and really start bringing in large tranches of cash.
Right, because right now, to anyone who doesn't know, institutions can't invest in penny stocks. So
yeah.
Technically, they won't be a penny stock after $5, which honestly, if you ask me, is just like a loophole, kind of like there's loopholes in the tax system. That's just a little silly, but hey, it's necessary to get that large capital from those institutional investors, which is ultimately what we want, right? As retail investors, that's the story of Palantir. Retail found out about it before the institutions, and the rest was history, right? And I agree with almost everything you said. Plus, I'll add on that I like how he mentioned, they're just testing their revenues and what makes sense. Like, they don't know how yet to get top dollar for this. Their margins already sound pretty good to me, above 35%.
Those are great margins, yeah.
Great margins for heavy industry. But they're learning how to actually price this. So hopefully their revenues will even grow better as they get more efficient in pricing things. And the cool thing about it is there's no competition really. Like, there's just if there's endless demand, but there's not enough supply, then they can really price this thing not at whatever they want, but at a pretty competitive rate. The big part is that people don't know about it yet, and that it's really on the back burner. It's like every business doesn't think of the waste. That's like the last thing they think about. They think of their products, what they're outputting, where they actually throw the trash away. You kind of think way less about. But slowly, as that becomes more and more of a concern with EPA regulations and with waste costs going up, because insurance goes up, landfills are running out of space, and this whole PFAS thing is becoming known to people. Like, it's just gonna cascade in like people learning about it from all sorts of different avenues, and boom, 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 you're gonna have like all this demand realizing like, okay, who are we gonna go to? This is kind of the only, at least maybe depending in a few years, one of the only companies that can actually help and take part of that market share, which they spoke a lot about the $450 billion waste destruction market. That number is just like, honestly, like it can be bigger than that. But it doesn't matter. The whole thing with that number, I don't even care what, 450, 500, 100 billion. We're sitting at 100, at 50 million market cap to what could be multiple $1 billion worth of a company. So, that's the big thing, the big picture here of what I'm looking for.
Yeah.
Yeah, go ahead.
To add to what you said too, when we went and met with them and we spoke with, when we were on a side, Jim had made a comment that, all of these states have mandates to get rid of their firefighting foam. And that stuff is just sitting in containers. And think of it like nuclear waste, where you have all of these nuclear power plants all over the country, and they have to just hold that nuclear waste at their facility. States are kind of sitting on a similar situation where they have mandates. They have to get rid of that at a state level. And, this is where 347 Water can either come in and immediately, like in their waste destruction model, come in and say, we can take care of all of that for you. And if they are the only ones that can do that, they can drive the margins that they really want for that service. And states are going to be begging for it because they have definitive timelines of how quickly they need to get this stuff off their books. So it's there's the sewage treatment element of it, but I think when you look at hazmat chemicals and these chemicals that are like particularly like firefighting foam, which is just sitting there and you've got to get rid of it, they're in a fantastic position to really grow their numbers as soon as they get turned on to that. And I don't want to necessarily, I don't know if I should say it or not, but I think I heard them say when we met with them that states are even saying like they would, if there was a way to get it to their facility, like say, for example, the state of Maine or New York has these firefighting foams. They just want it out of the state because once it's out of the state, then it's no big deal. So if there was a way to actually transport it to them, they'll be like, yeah, we'll bring it to you. Just get rid of it. So we don't have to deal with it anymore.
Yeah, that is something that I didn't know that I didn't know about the whole industry is they're playing like hot potato. I saw someone on Reddit put that analogy. Like no one knows what to do with the PFAS. They're just like, all right, throw it away here, throw it away here. It just ends up in the landfills, moving it from state to state. No one wants it. And it's just like, it's just like the game hot potato until someone has to do something. So I just, that was an interesting analogy I saw on Reddit. But let me get to the comments here and also mention to anyone who maybe wants to join us and talk to me and Mark live right now. I just went on the Discord. I'm on like the live chat, so you can like talk to us like a phone call and just ask any questions, or maybe if you want to just give your opinions. Speaking of, let me get to here. This is right after the live stream ended. This guy says they just filed for $100 million mixed security shelf registration with the SEC. I'm not too sure what that actually means. Do you know anything about that? What is a mixed security shelf registration?
I don't. I don't.
Okay, that does sound bad though. Or maybe that sounds good. What does that mean? They get 100 million? No, there's no way. Um, that would be amazing news for them. Solid, solid, solid. No hype. Midpoint revenue will increase per guidance 75% in 2026, and I sense that the CEO and CFO are keeping it under promise and potential to over deliver like recurring revenue. You know what? That is a great point. The numbers I was seeing, I was a little bit like, 2026, their guidance was what, 6 to 8 million in revenue. I thought that's pretty low, but it was pretty promising to see. They said this year they're going to make 4 million total. We're only at 1.9 million for the year, so that means the quarter 4 they're making $2 million.
Yeah,
that's crazy. That is a blow up. If quarter 4 is making $2 million. But then how are we going from a $2 million quarter to 4 to 6 million for the entire 2026? That was a little bit odd. Those numbers seemed a little low to me, but maybe to his point, they are trying to under promise and over deliver. That would be awesome. But maybe that they're also trying to do that because they want that reverse split. If they kind of over promised right now, we would have been maybe above $1 and they wouldn't have been able to reverse split, get institutional investors. So it's kind of a catch-22. About reverse split, this guy says, I know it's the biggest concern to everyone here, so maybe we should talk about this. I honestly don't really understand what this guy meant in the comments, but what happens in a 10-to-1 reverse split, before split, after split, 10,000 shares at 50 cents, shares become $5, right? $5,000 total value is 5,000. I think what he's trying to say is your money doesn't go down in a reverse split. It's the same value, you just have less shares, which is correct.
The challenge that you run into with a reverse split is it opens up more leverage for, you've got more room for shorts. Shorts can come in and drive down. If you go from 50 cents to $5, now shorts can come in and they've got more pretty much room to short the stock down. But that's also if the company's dying. I would agree.
That's a good point. Wait, I do want to say, is that the only concern then? Because if that is, I'm not worried because we have an under 1% short interest. People are not actually interested in shorting it. I thought it's concerning because that means, well, that's inevitably a dilution event. Like the company is going to, once that happens, they're going to like get some money or something. That doesn't happen. They don't like dilute by doing that, I guess.
No, you only get money if you're diluting shares. If you're doing a reverse split, it's the same as doing just a stock split, right? Like if a company is just going up like crazy and they want to drop the price of their stock, they'll do a split. And you see, companies that get up to $750 to $1,000 or up into the 1,000 ranges, they'll do a split so that it makes it easier to buy, for people to buy shares. A perfect example, if everyone on the call here, is to go and look at Bombardier, BDRF. Bombardier about 5 years ago did a reverse split. Their company they were having a really hard time with getting companies, with getting some of their product lines. Like they were just underwater. They owned trains and they were losing money on it. And they had a huge train division. They sold off that train division. And then they had spent years and years and years developing an airliner called the C Series. And that also really put them in a huge financial straits. So the stock literally went down to like 25 cents or 19 cents. And they did a reverse split. And I think it was a 20-to-1. And so, the stock went up to like $15 or $20. And similar to what they said on the call here, when you are in that, when you are below $5, institutions can't just by their own rules, they can't buy into they can't even talk to you, or they're not going to buy into you. So Bombardier really circled the wagon with their product line, said we're only going to focus on what we make money on, which was private jets, and now the company's worth the stock's at $150. So, and again, it's just a function of percentages. Like, are you going to complain if a stock's at 40 cents now and it goes to 4, or if it's at $5 and goes to 50? It's percentages are percentages.
Yeah, I think the biggest concern is like, okay, these people like buying thousands in shares, and once we're not a penny stock, it's like a little bit out of reach. But it doesn't matter ultimately. Like, what matters is the company isn't dying. People aren't going to be shorting. And yeah. Anyways, I have someone here on the Discord. Terrible Trader. Welcome to the show. Never actually met or chatted. What's up? Can you hear me? Are you there? It looks like he's not there. Okay. Well, to anyone who's listening in, if you want to join the Discord and have a little chat with us, I'll be available here. Let's get to some of the comments. Fat Dog agreed with you that AFF, a firefighter film, is what can get mainstream, can get them mainstream. So what is the best thing to do? To each their own, if you're there was like a college student that I saw crying over losing like $200-$300, I wouldn't, if you're worried about that, you should, this is a penny stock. You should know the risks. High risk, high reward. The reward here is really massive, and the risk is also massive. So to each their own. But what we're doing is buying and holding. I'm actively buying. I don't know about you, Mark, but I've been actively buying on this pretty good prices below 40 cents. Buy and hold because it sounded like good news. Yeah, honestly, after evaluating a little more of this stuff and talking to Mark right now about the reverse split, realizing really the only concern is short interest increasing, I'm not that concerned because I think short interest is like at 0.75% last I saw. So that's like really low. It means they diluted the stock. I guess he's referring to the 100 million mixed securities. That would be a huge dilution.
Yeah, that's not even their.
Maybe that's why the stock went down to 35 cents earlier.
No, it wouldn't be. If they did that, it would be like their market cap alone is standby. I mean, their market cap is 60 million. They can't. It's impossible for them to dilute their stock to raise 100 million. I wonder if they have institutional investors online and that want to come in with very, very large tranches that would be outside of your market cap. And then if that's the case, you may have to issue more shares to get that capital stack. And that I'll do some research of what that means. If there's someone on the line that understands what it means, explain.
Okay.
Reach out. That'd be great.
Yeah. Reach out and on the Discord, and maybe we can talk about it on tomorrow. By the way, I put on the YouTube on my YouTube. You guys can see now. 7:30. I'm premiering the tour that me and Mark had, and it's an hour and a half video. I will be on the live throughout the whole premiere. So you guys are kind of watching it together and we can chat about things throughout the tour as it goes. So that'll be fun. Fat Dog says, personally, I'm holding my small stake. It's going to be a bumpy ride in 26. I want to see destruction volume numbers.
That's a good point. Very good point.
When we get a logical administration in, all these PFAS herbicides they are approving could become liquid gold for them. Yes and no. Honestly, I'm not too worried of government regulation. This is a trend that was only going to be growing and growing. Doesn't matter what government party is running, the country. This is inevitable. Even when Biden was in office, people were talking about PFAS. This company was obviously operating. Now it's just a matter of scaling this thing. And but yes, if government does create heavier, stricter regulations, that will drive demand up faster. But I think honestly, to me, demand doesn't matter. Like demand is there. It's just a matter of getting this thing up and running and providing the supply. It's literally that straightforward. Like they have just a fire hose leaking and they just need to freaking shut the valve and get this thing like operating. I don't know.
I think one of their really large
yeah.
One of their really large if they start getting DoD contracts to eliminate waste at DoD facilities, that's going to be an enormous boost for them. And because again, municipalities, their money has to come through tax revenue, and it's very, very limited. But DoD facilities are, going to be more driven of, we have to get rid of this waste on this site, and that's a much larger bucket of money, I think, because now you're talking federal dollars, where a state needs to have to go get a federal grant. DoD would just be like, yeah, we can pay to get this destruction of our waste on our facilities.
And the best thing about those are like permanent contracts. They don't just switch over easily. Fat Dog, I have Small Doggy here coming to say hi. He drinks, by the way, out of my reverse osmosis water. Very little PFAS.
Is that a poodle?
A golden doodle.
A golden doodle.
Yes.
Good dogs.
They come from, it's a golden retriever and a poodle. So
yeah.
We saw that comment. And okay, looks like we're caught up. The market cap is the only thing that's relevant to making large gains. That's not true. I mean, if that's true, you can invest in any penny stock. The whole point here is finding the diamond in the rough, the hidden gem, if you will. There's a bunch of penny stocks, but only a few of them become multi-billion-dollar unicorns, right? That's kind of the bet here. And this is innovation. This is tech. Even though it is heavy, large, municipal industry kind of stuff, like it's government funding and, dealing with very slow, getting these deals it takes a lot of time, right? You're not dealing like B2B, you're dealing like, I don't know, is there a term for it? B2G, like B to government, like business to government? There should be a term for that. But yeah, it takes time, and the opportunity is just massive, and the market cap is tiny. So it's just very exciting, and I hope this is the diamond that we have all been looking for, the next Palantir or whatever. I don't necessarily think it's the next Palantir where everyone will know about it, because it's not a company that, I mean, even Palantir though, it's not a consumer-facing company and people do know about it. So that's surprising. But honestly, your day-to-day people don't know about it. Just people know about it because of the gains, right? But they don't really have actual consumer-facing products. But it doesn't matter. What matters is institutions know about it. People who care about the environment know about it, and also if the numbers make sense and revenues just grow up, like regular retail investors, like a lot of people here, are going to just be hearing about the story and getting in. So yeah, this is just we're hoping for very high growth. I will say the numbers they're projecting are a little disappointing, but hey, if they're making 2 million next quarter, wow, then we're going to be looking forward to a really big 2026 year, I think. Yeah. Does anyone know where to buy? Okay, what is that? That's just some scammer. I meant like whether it goes from $5 to $50 or 50 cents to $5.
Yeah, he's talking in regards to the reverse split.
Yeah.
If there was a reverse split, it's the market cap stays the same in a reverse split or in a split. So it's a function of percentages.
In theory, it does, Mark. In theory, it does. But now that I've been in the markets for a while and been invested in some penny stocks, there has been some stocks I've seen. I just don't understand how it happens. They reverse split and the market cap goes up, even though the stock goes down. I don't get it. And I honestly don't want to say any names to say any tickers. I could tell you after.
Well,
But
if they take,
there's one company I looked at. It was I don't get how this works. It was 500,000 market cap. I'm like, this is crazy. If this just goes to 1 million, that's a doubling. If it goes to whatever, it's a crazy amount. They reverse split a crazy amount and it dropped. The stock price went down and then the market cap went from like 500,000 to 28 million. Something about that I don't get. Like
they probably took shares off them. Yeah, that's weird. That may have to do with like when you get a VC coming in or you have some sort of a unique investor coming in. And again, like if you own a company and like you own this company, what if someone steps up and says, I want to change your share price structure or change your share structure in your ownership structure because I'm buying into your company at a really large price. Like right now their market cap is 60 million. And what happens if a large institutional investor says, I've got 200 million to invest in you? Does your company now become 260 million? That guy can just buy the entire company. So if they're going to invest that large number of money, there's going to need to be a filing with the SEC to change the share structure.
That's interesting. So I don't know what happened with the specific company I had, but if that does happen with this company, does that mean the market price goes up? I mean, the market cap obviously goes up, but what does that mean for the share price then?
Yeah.
Right? Does the share price ultimately get down because it's a heavy dilution event, giving all that ownership, but at the same time we're getting $200 million in cash?
Yeah, I think
also will be extremely bullish for the company and just attract new investors. It's a bit of a win-lose scenario, and we'll just have to see how it plays out, actually. But to say the least, this company is extremely exciting, not just for us, clearly. There's so many eyeballs on it. I mean, this has been my largest live stream ever, so that's pretty cool. And it's not because of me, obviously. It's because of the company, so... Cool.
And it could also be too, like the filing. Remember with Joby when Toyota came on and said, okay, yeah, we're going to invest 250 million. They were getting a bit. Then I believe Joby had to dilute shares or had to issue more shares just for them because they didn't have that many shares on the market, right? Like owners still own. If you only have we'll keep the numbers simple. Say someone comes in and there's 100 shares out. There's 100 shares to make up the entire market cap, and 40 of those shares are outstanding. If someone comes in and says, "Well, I need, I'm going to pump so much money into your company," you just need to add more shares to the market as well.
And I guess they're allowed to do that, but there's a cap usually on how high that number is, right? That they can dilute.
Yeah, right? This is where we need to
pop open the
Grok or something like that.
Yeah, well, I think it's in their Q3 actually, if I look real quick, but that's fine. Just generally speaking, if that happens, dilution does happen, so something to think about. Jeff Stevens says, I dealt with Palantir back in 2012 for the DoD, like working with them or something. That's interesting. They had family members of congressmen on their board. They totally played politics to get where they are. Interesting. I mean, they got Peter Thiel, so that's helpful too. Don't drink too much RO water. What is RO? Too pure is bad. That's why RO water plants add minerals back in. Do you know what that is?
I don't.
Oh, reverse osmosis. Oh, that I was saying. Oh. RO water plants add minerals back in. Wait,
I thought they put minerals in for taste.
Oh, no, minerals are good too, but you're right. While he is right, I don't just have a reverse osmosis. It cleans through reverse osmosis, becomes pure, as you say. And then I have a machine that alkalinizes. You can actually change if you want alkaline or pure or acidic water. You can change the levels. But most importantly, it hydrogenizes. I don't know the freaking term. Hydrogenates the water. So it's almost like H3O, I like to say. Not really. I definitely don't know the science of what I'm talking about, but it's called hydrogen water. It's very, very like a new thing that actually that's what got me interested in 374 water in the first place, learning about water and learning about this hydrogen water. I'm like, it basically sounded to me like water on steroids. Like it's just better water. It gives you more energy. It makes your blood flow faster. Like ultimately it's just clean, good, better water is like good for your body, where versus all this microplastic cancer we're putting in our bodies definitely doesn't help. So that's a big reason I got the machine. It's like $3,000. And then I started learning more about water from all this stuff. And that's how I found the company. And I'm like, man, this needs to freaking be big. And then, needs to be big for the world. But then it's like, okay, now I'm invested in it. It needs to be big so D's Nuts can get his Lambo, right? Are you here, D's Nuts? I don't know if he's on the chat. Maybe he's been a little salty from the earnings. But I saw he was a little salty today, actually, in the Reddit, talking a little bearish. He's been very bullish. Actually, what are your guys' take in general? Can you guys just give me like a quick word, bullish, bearish, like after this earnings, just like a quick one-worder? We should probably end up wrapping up here soon. It's almost 6 o'clock. The market cap is the deciding factor. A market where a monopoly, I think he meant to say definition, a market where a single company is the only seller of a particular good or service. While we might not be a monopoly, it could be an oligopoly, which is also perfectly fine. An oligopoly is a few companies that pretty much own the whole market, which tends to happen a lot with innovative technologies, by the way. But hopefully they're the Googles and not the Yahoo of this space. Reverse split is not the intrinsic issue. It's the sales and profitability quarter and on quarter going forward. Yep. On this compounding basis, the patients will be rewarded.
I agree.
Yeah. Yeah. I don't. Yeah.
The patient will be worth. Yeah.
Yeah. The reverse split's not really the issue. It is the growth in the, as he said, EBITDA. He said it funny. I liked how he said it. Let's see that EBITDA growing. What's the link to the Reddit? It should be in the description here. If it's not, just look up SCWO. Bearish short term. Okay. I'll buy more tomorrow. Actually, how is the stock looking? We went up to 39 cents and now back down to 35 cents. Well, it looks like people don't know what to make of it. So honestly, it looks like we just went sideways. To be honest, I'm very surprised. But we didn't go down. That's really good. There was someone who showed a really simple, nice picture on the Reddit of the chart from our Q2, how it looked like, which was a similar pattern. And then after they released their earnings, it just shot down a lot. And we did not do that today. So that is great. At least we kind of stabilized and hopefully just grow from there. And tomorrow, when I release my video, hopefully you guys will get some more conviction to be bullish long term. If you guys are bearish short term, that's okay. Because I'm not selling anytime soon. I'm not even in the stock for a year. So if I do sell, I got high short-term capital gains, and we want that long-term capital gains. But in general, we want the gains. So that's what we're excited about. Anything else here? Should we wrap up? Mine 2K shares tomorrow. All right, Mark. Anything you want to share? You know what? I really wanted to show them the intro, but my sound wasn't working. What if I just send you the link and you air it?
Sure. Yeah. Send it in the prep chat.
Can I is there a way? Okay, I'm gonna send it in the private chat. You're gonna have to open it first before you air it, and try and hide the link on the top so no one can see the link, because it's unlisted. So they could just look up the link after.
All right, stand by. Let me see if I can do this. How do I hide the link?
Well, you could open it, just delete the link and not go on a new page, or just move your whole tab, like your whole Chrome, your whole browser up above. It can't be seen.
Let me see if I can figure out how to do this.
Cool, you guys get a little sneak peek special preview. I'm just gonna play like the intro teaser. I want to. We'll see.
Let me try this.
Okay.
We're going to see the link for just a second, and then it'll be gone.
Oh, that's not good. Then they could pause it and see it.
It's just going to be for a second. Hold on.
No. It can't be seen. I mean.
All right, give me a second then. Let me figure this out.
Okay. Could you just like on the thing delete it and then it won't be seen, like highlight or?
What do you mean delete it though? Like I'm sharing it through the link you sent me, so I can't like.
Let me show you what I mean. I'll just share my screen here real quick.
All right.
Here, can you see my screen?
Nope.
Oh, no, not yet. There, can you see my screen?
Yeah.
Okay, so let's say I'm here on this PDF. You can just go here, delete, and you don't see the tab. You don't see the
Yeah. All right. I get what you're saying. I'm smarter than I am. All right, give me 1 second. Let's try this.
All good. We just got 27 people waiting. Thanks, guys. Thanks for tuning in. This was fun.
So let's try this now.
We'll wrap up with this intro video for tomorrow, and then I think we'll call it a night. Very excited. Hopefully this will hype people up a bit.
All right, can people see it?
There, I need to add to stage. There we go. Yeah.
Can I see it?
Click T. Click T, by the way.
T?
Yeah.
What is T?
Keyboard? No, just on your keyboard, T. Click on YouTube. Just click on some, yeah, and then T. There we go.
Okay.
All right.
Good. You ready?
Yeah. Sound is good.
It is the water they swim in. Like a fish doesn't think about the water. It's just in the water.
374 water assembly plant. I just like to show, like, guys, look how scientific, and I don't know what any of this means. What is this?
So this is human biosolids.
Oh,
that's
this
been bacteriologically
poop.
treated. Yep.
Poop.
But
Okay,
that's what the material looks like going in, and this is what comes out.
that's crazy.
You hear that? Because the guy from Orlando tells me, because people aren't going to stop pooping, and as long as we can continue, we got.
Yeah.
Think about it this way: if you're ingesting PFAS, at least I'm not ingesting it in my water supply anymore.
Earlier was in
Let's head
the
over to the other plant.
control room here.
Have you seen a shift in retail investing becoming more powerful and impactful?
Talking about oil and gas. That's not talking about the chemical companies. That also the same liability issue.
Oh man, the TAM is endless.
And that's what people don't understand. It's just the demand is just absolutely massive. I've not seen anything in my career that has come close to this.
Hey, that's the risk with penny stocks. People know. They should know.
A penny stock that shouldn't be a penny stock because of the demand for our technology. And
continue to evolve that shareholder base.
Yeah.
You watch over the next 10 years,
that shareholder base is going to go like this.
Yeah.
10 years from now, you're going to be like, now all the institutions are here. We do have constraints. If we do not trade above $1 for 10 consecutive days, we will lose that NASDAQ listing, which would be a shame for a company that has this much demand. I'm looking at a penny stock that shouldn't be a penny stock. We're talking about to folks that would rather not give us $50 million. They'd rather give us 100, 200. I'm seeing this company being billions of dollars. I can see the package in there. This is the perfect time to be invested in the company because nobody knows about it.
Cool. You could pause it. Yeah, there we go. Cool. Yeah, that was a little intro teaser. You guys finally got to see a little bit of the tour that you guys have been waiting for a while. So yeah, that will be premiering tomorrow at 7:30, and very excited to have that finally released. Cool. I think we should wrap it up. Any thoughts on that little intro? Anyone? What's this last comment? I don't know. According to Yahoo Finance, there are currently 83 institutions owning small parcels by their standards of SCWO stock. We also saw Insto Analysis Lakeside ask a question on a call today. Interesting. So Institutional Analysis asked a question today. 83 institutions own small parcels. I'm not too sure what that means, but sounds like, I guess they're only allowed to own small parcels until they're not a penny stock, maybe. But what that signals to me is institutions are looking at them. If there's 83 different ones, that's a lot. All they need is like one or two to actually close a good deal with, and we're off to the races from there. So looks good. Looking forward to the premiere. Thanks, Nebix. That's interesting. 83. Maybe those 83 can't invest until they have to be $5. So 83, that's a lot. Is that normal? I don't know if that's normal. I am a believer, brother. I am buying more. Maybe institutions will buy more tomorrow. Let's see. All right. Well, it's already past 6 o'clock. Any last words, Mark?
I'm good. Just enjoy the premiere. We had a really good time going down there and meeting with them. They were really forthcoming. They opened up their entire facility. We were there for 3 hours, probably more than 3 hours.
Yeah.
So, and the thing that really stood out to me when we went down there was them saying now is a good time to come and visit us because potentially in 3 to 6 months, we're not going to have time to give tours like this anymore. So they're confident that they're positioned for growth, and they've got a lot of work ahead of them to do, which will, their work that they are forecasting only means positive growth for us investors.
Awesome. Fat Dog, thank you for watching. Thank you all for joining us today. This was a lot of fun. And as always, guys, until next time, stay thinking, question everything, and peace out.